Hey everybody, welcome back to the channel. This is Top Crypto Bull here once again to update you guys on the greatest and latest news and rumors of the crypto world. Let's get right into it, guys. Well, guys, the question on all the crypto investors' mind is Bitcoin going to rally or is Bitcoin going to correct after the Fed announces the rate decision on September 18? So that would be tomorrow. September 18, guys. So I will give you my thoughts at the end of the video, but let's see what some top analysts are saying. What's it going to do? Is it going to rally or is it going to correct? So they're saying that Bitcoin could rally as high as $65,000 following expected rate cuts later this week, but analysts fear U.S. election uncertainty could keep crypto asset prices lower for longer. Bitcoin is tough to call and could fall as low as $53,000 or rally as high as $65,000 following the Federal Reserve's decisions on rates on September 18. Jonathan DeWitt, the Chief Investment Officer of ZeroCap, he's saying he's anticipating a 62% chance that the Fed will cut rates by a minimum of 50 basis points. That was a minimum of 50 basis points, which he said already contributed to the brief rally that saw Bitcoin touch 60,000 on September 13. However, West said that the price action is tough to call due to lingering uncertainty around the impact of rate cuts in the short term and is only complicated further by the upcoming U.S. elections in November. We're seeing a Bitcoin downside target of 53,000 and after the recent range lows with an upside target of 65K after breaking higher from the descending wedge. Tough to call in a direction until we get closer to the election, but risk-on conditions should lead to short-term positive sentiment. Bitcoin is currently trading at $58,000 after rising to just over $60,000 on September 13, thanks mainly to robust CPI and PPI inflation data. Given the Fed has waited this long for the initial cut, ZeroCap is in the 50 basis point camp, as opposed to backing the more conservative call of 25 basis points. The Fed's dot plot is looking more and more like the start of a rate cutting cycle, which should support risk assets into the end of the year. The latest data from CMM Group's FedWatch tool currently shows an expected 62% chance of a 50 basis point rate cut on September 18. The upcoming rate cuts have been the source of heated debate among market commentators, with many analysts split on whether or not the upcoming rates will be bullish or bearish for risk assets like cryptocurrencies. Historically, rate cuts have been viewed as bullish for risk sectors, allowing investors to borrow capital at a lower cost and seek out risk due to lower interest on cash and treasuries. However, several analysts have pointed to previous market activity, like in 2001 and 2007, where rate cuts preceded recessions, particularly in the presence of weakening macroeconomic conditions. DeWitt also added that continued uncertainty around the upcoming U.S. elections is weighing on the crypto market, with investors unsure how Harris' victory could impact the crypto sector on U.S. soil. Well, there you go, guys. That's what top analysts are saying. And now I'll give you my opinion. Like I've been saying in my previous video, guys, I think like I said, September, I think it's just going to be more sideways action, like August, guys. We're just going to like dip and recover. But as far as to September 18, when they announce the rate cut, I think they are going to cut rates. I don't think they'll be neutral. Like I don't think they're going to raise rates, that's for sure. And I don't think they're going to be neutral where they're not going to do anything. I do think they will at least cut 25 basis points. They might cut 50 basis points. But in my opinion, I think they will at least cut 25 basis points tomorrow, September 18, guys. And it is very volatile. Like always, whenever the Fed, meets and they announce what they're doing, whether they're cutting rates or not cutting rates or doing nothing, it's always volatile, guys. So just watch out there. Just be careful if you're trading the market. September 18 and September 19, it'll be very volatile. But probably, after 2-3 days, once we get into the weekends, it'll settle down, and we'll probably just start ranging again. And I do, like I've been saying in my previous videos, I think September is just going to be like August. We're just going to range somewhere between like 50K and like $65,000 for Bitcoin, and your favorite cryptocurrencies are going to range on their prospective prices too. But I don't think Bitcoin is going to fall below the Black Monday low of August 5th of $49,000, and I don't think the cryptocurrencies are going to fall below the August 5th Black Monday lows either, guys. So I definitely see more upside than downside, guys. I do see a lot of volatility coming in tomorrow after the Fed announces what they're going to do. So be careful out there if you're short-term trading, guys. But if you're just holding until the top of the bull run, then you have nothing to worry about. Just keep holding, guys. Don't get shaken out. If you see the market correcting, don't get scared. Don't let them shake you out. Don't sell your coins out of fear for just because you hear people saying that we're gonna go into a recession and that there's all kinds of fear and World War III and all kinds of stuff they say out there in the media. So definitely don't get shaken out. Just keep holding your position and you will reap the rewards in 2025, guys. Well, that is what I think is going to happen after the Fed meets in September 18, guys. Alright, guys, let me know what you guys think is going to happen. Are they going to cut rates? Are they going to raise rates? Are they going to do nothing? Are they going to cut 25 basis points? Are they going to cut 50 basis points or higher? Let me know in the comments what you guys think, guys. Also, help us out with the YouTube algorithm. Like the video. Also, help the channel grow. Subscribe to the channel. This Top Crypto Bull signing off, and I'll see you in the next one.